A very good afternoon, participants. Thank you very much for joining in today's open house on passive fund landscape in India. To discuss for today's topic, we have with us Mr. Anirudh Chatterjee, who is the MD of NSE Indices Limited and NSE Data Analytics Limited vertical of NSE Group. Along with him, we have Harsh Rawal, who is from products team of NSC, and I, Jwalan Gandhi, welcome all of you on behalf of my colleagues and NSC. In today's topic, we are going to mainly discussing surrounding the passive fund, the macro level trend, which have the participation trends in India, and the main discussion would be surrounding ETF. We hope that almost all of you must have heard about ETF, which is exchange traded funds. So today we'll be taking you through the journey on how the passive fund participation has evolved in India. What are the key trends that you should be looking into, and what are the key underlying themes which are already available through exchange traded funds and passive funds in India. Without further ado, I'd like to hand over it to Mr. Chatterjee to take us through today's topic. Before that, I'd just like to request you that if you are having any questions during this session, please keep dropping them under the Q&A window. We have a dedicated Q&A session at the end and we'll be taking all your queries. But please ensure that the questions are related to today's topic only, which is passive fund landscape in India, because other topics will not be addressed today. Thank you. Thank you very much. And again, welcoming all of you, handing over to Mr. Anirudh Chatterjee. Anirudh, over to you, please.
Thank you, Jalwant. And so, first of all, thank you very much for inviting us. And I also want to wish a very good afternoon to all our viewers and participants. I think in the next half an hour, 45 minutes, what we will see is that we'll try and kind of share a very exciting journey that we have seen, which is happening on the passive side of the industry. We have divided the entire presentation into three parts. The first part, we are going to talk the long-term trend, particularly right from 2020 onwards until date, what we have observed as a trend happening in the passive fund industry. But within that passive fund industry, we'll particularly zoom into ETF. And then in the second part of the presentation, we'll also try and understand a little more about the dynamics that we are observing into the more short-term historical trend, which is more like a monthly trend across last 12, 13 months. So that's going to be the broad participation, the broad presentations contour for the next half an hour, 45 minutes. Now, before I start, of course, one question is, what is passive fund? And what is ETF? So, I think the best way to look at them is to also ask this question in chat gpt or any other gen AI kind of a platform. Now, passive funds, as many of you would already know, that it's a fund like mutual fund, but it is not managed actively, which means in case of a active mutual fund, when a fund manager takes a decision that stocks to buy, what stocks to sell, and therefore the entire portfolio is managed and maintained by the fund manager. And the fund manager's objective is primarily to beat the underlying benchmark typically what we know as a mutual fund or actively managed mutual fund. Now, historically, that we have seen not only in India but across the world,
Anirudh, seems like there is some problem in your connection. Sure whether Jalwant and
Participants, apologies. It seems that there is small network issue, so please bear
following
with
the
us.
index, about tracking
Anirudh,
the
sorry
index.
to interject. We lost your connectivity twice. So if you can just reiterate with your last 1 minute of explanation, please. Probably the fund manager part you were
Sure.
discussing. From there, we lost your connectivity.
Okay. Is the connectivity good now?
Yes, it's very much
yes.
good.
Excellent. Do let me know in case if it drops again, then maybe I'll switch over to a separate systems altogether. Sorry about the
Sure.
inconvenience. So what I was talking about the passive funds. So I mentioned what active fund is, and funds where the fund managers they take their own discretion in terms of managing the entire portfolio. A passive funds on the other side simply replicates the underlying index. So it basically replicates the underlying index, and in terms of the return, it tries to generate the same return as the underlying index. Now, it's a trend that we have seen globally. I mean, of course, in India, it's also a trend that we are noticing and observing very, very closely. Now, if I bring it down to current state, now the size of this entire passive fund industry today is quite large. It's about 15 lakh crore worth of AUM, which is tracking these passive assets. In US dollar term, that will be over $160 billion today. There are 668 schemes currently, which are categorized under this passive funds category. And there are 52 million investor portfolio which are available which have invested in these passive funds. Now, if you broadly look at the distribution of these funds, from an AUM perspective, almost 80% of the AUM of the passive funds are in the ETF category. The other category of the passive funds, which are not ETF, are called index funds. The only difference between the index funds and the ETFs are listed in a stock exchange, which is available like stock. But index funds are very much similar in structure like the ETF, but they're not listed on an exchange. So you have to kind of go and invest that to the mutual fund. In terms of the total number of funds available in the market, around 47% funds, which are ETF, as roughly about similar number of funds are available on the index fund side. And in terms of the distribution of the portfolio, as of now, 72% of the portfolios are on the ETF side. Now, if we go to the next one, and this is very interesting, I mean, where we are trying to look at the net inflows in the passive fund industry in the recent time. I think if you look at the last 12, 13 months, it's been a consistent positive inflow which is happening in the industry right now. In fact, year to date, from April 2025 onwards, we have already received about 150,000, almost 150,000 crore worth of AUM in the ETF, and of course another 14,000 crore worth of AUM in the index funds. So that's a new a net inflow that we are looking at that we have received into the passive fund industry in this year itself. If we look at the ETF now in a little more closer way. So ETF right now has about 12 lakh crore of AUM. A large part of it, which is 66% of it, is in the equity asset class. 8% is debt, and 26% is commodity, mostly gold. Similarly, if you look at the number of distributions, the number of schemes within this asset class, 75% of the schemes are again of equity, 12% are debt, and 13% are commodity or gold ETFs. And more or less a similar kind of a distribution that we have seen on the folios. Half of the folios are about 7%, and 43% of the folios are on the commodity side. Now, this is where it gets really interesting. So if you look at the overall trajectory of the AUM growth of the ETF itself, right from 2020 onwards. So 2020, the ETF volume or the total AUM was about 1.5 lakh crore. Now today, that has actually gone up by about 12 lakh crore. So that's almost a 32% annualized growth that we have received, that we have seen since fiscal year 2021 onwards. A similar kind of a trend that is also observed when we are looking at the inflow into the ETF. On an average, every year we have seen upward of 60,000 crore of inflow into the ETF assets. I think last year we have seen almost like a second record high inflow into the asset, which is upward of 80,000 crore. This year we have already seen 1,50,000, close to about 1,50,000 crore of inflow, and it is growing because we are still have got 2 more months to cover. Now, what is important here to understand, and I think that's something that we will see in the next couple of slides as well. Now, the dynamics of the inflow has changed a bit in this particular year. Of the 1,50,000 crore which has come in this year, large amount of it, almost close to about 60,000 crore, that has come from the commodity side. And that's what we have seen last couple of months particularly. Uh, this is how the number of schemes have grown in the ETF world. So March 2022, I mean, if you look back or rewind, there were less than 100 schemes available in the ETF front. But now that number has gone more than threefolds to about 314 ETFs, which are available through the exchanges platform. Similarly, I think we have seen a similar kind of a trajectory on the folios as well. While March 2020, the number of folios was less than 25,000, and now we have more than 3.75 crore folios available linked to the ETF schemes. And this is how the number of funds are actually increasing. So every year we have seen increasing number of ETFs are getting launched. So I think the number used to be in the lower tens, and now we have seen for the last couple of years, particularly for last 2 years, on an average we have launched about 50 funds. So last year we had about 40 new ETFs being launched. This year we already launched 63 ETFs, and there are more in the pipeline. So now, if you look at the asset mix of the ETF, so this is how it looks like. So it is to be broadly debt and equity for a fairly long period of time. 2027, we have started seeing introduction of commodities, a gold ETF, but again, quite muted. We see a steady increase of the commodity and debt as well as equity till 2023. Of course, 2024 was a difficult period for the market as a whole, but again, the trend started picking up from 2025 onwards. So last year we had about 34 new equity ETF launch in the industry. There are 8 debt funds and 6 commodity focused funds. This year, the equity number has already crossed 50. So 51 new funds with 8 commodity focused funds. That is a bit muted, and largely because of the withdrawal of the tax benefits from the budget last year. And I think we are yet to see a kind of a revival trend on the debt side of the ETF. But overall, if we look at the holding pattern for all these ETFs which are available for trading, I think it is very, very clear that a large part of the holding in terms of the AUM are coming in from institutions, largely large institutions like EPFO. So they are the one who's been instrumental in terms of growing the overall AUM for the ETMs in the country. But I think what we have also seen, and that's quite evident, that close to about 15% or rather 18% of the overall AUM, which are also now coming in from the HNIs and retail. And if we flip that with the number of folios, so that would be about 94, almost 98% of the overall folios. So 98% of the folios which are HNIs and retail, they're kind of accounted for 20% of the overall AUM. 1-2% of the folios which are institutions, they are accounted for about 82% of the overall AUM in the ETF world. So that's broadly the kind of holding pattern that we have seen right now on the ETF side. Now, if we zoom into the recent dynamics for ETF, so what we have seen is, the pattern has been consistent with the overall growth in the industry. The equity ETF in AUM terms continues to grow. I mean, last January 2025, the overall AUM under the equity ETF was about 6.53 lakh crore. That has now gone to about 7.82 lakh crore. Debt is kind of moving sidewise from from about less than 1 lakh crore close to about 1 lakh crore. I think it's more or less stable at that particular level. What we have seen growing significantly is the commodity focused ETFs from about 65,000 crore. Now, this year, I mean, this month, sorry, in the last 12 months, this entire AUM has gone over 3 lakh crore. And I think, particularly in the last couple of months, from October onwards, the growth in the gold focus or commodity focus ETFs has been phenomenal. Last month, of course, which is January 2026, alone, we have seen more than 1 lakh crore worth of net inflow happening into the gold segments. I think that's kind of increased the overall AUM for the segment as well. A similar trend is also visible for the net inflow for the last 12, 13 months, where we have seen a bit of negative or kind of redemption pressure on the debt side of the fund. But equity and commodity both are showing a consistent inflow of funds into the overall AUM kitty. And that's also again consistently visible into the number of schemes which are being launched. So the debt funds again in January 2025 used to be around 33. That number has slightly gone up to about 38 in January 2026. The equity number of schemes have gone up from 172 to about 334. That's a very steep increase in the overall number of schemes in the equity side of the ETF. And the number of schemes available on the commodity side have also equally grown from 30 to about 42. So a very consistent growth across AUM, across number of schemes available, and of course, a very steady net flow of investments, which is happening through this recent period as well. And if we look at now in terms of the new launches, and again, if you look at little more granular data, and you will find that every month, on an average, there are about 5 or 6 new ETFs which are being launched, right? And very interestingly, what we are observing here is that now, I think that's basically also give us a different kind of dimension altogether, that maybe some fundamental change is happening in the industry altogether. While the industry was initially led by institutional money, and therefore the focus for most of the AMCs to launch broad market functions. But now that we see a lot of HNIs and retail participations into the market, so there are lot more innovative products which are also coming into the fore. I mean, we have seen smart beta ETFs being launched. We have also seen, thematic or sectoral ETFs are being launched, and that's what is also kind of ensuring that there are consistent number of new product ideas which are getting introduced in the market month after month. If we now switch over and see what is really happening on the trading side of the product, while there is a consistent growth that actually happened in the trading, but the trading numbers were kind of muted over a period of time. And I think recent times we have seen a huge splur in the overall trading turnover for the overall ETF classes, but largely driven by the commodities. Now, if I go to the next slide, that will make it even more clearer. So if you look at 2021, so I think the overall average daily turnover for the class as a whole was about 273 crore per day. Now that number today is over 3,817. And this is again the kind of average daily number for Y2D. And this number, I think, is going to significantly look different when we close this particular year. And what you have seen in terms of the dynamics, now, of course, This year, a large part of these trading volume is represented by the commodity focused ETFs. That has gone from almost no number to about over 2,000 crore Delhi. Um, and I think the overall number is for fixed income and equity has been consistently growing over a period of time as well. I mean, fixed in equity, the ADT was about 605 crore last year. That we have seen already revised to about 718 this year. Similarly, the fixed income trading as well has gone up from 735 to about 818. So I think there has been so as we see the AUM growing, as we see the number of products growing in this particular industry, I think it is also important to see a reflection of that is happening on the trading side of the world. Now, what is one thing we need to remember in mind that large part of the AUM, which is about 82% of the overall AUM, that is still not coming in the market because that's EPFO and they go to the AMCs directly and make those and kind of buy those units. So it is only about the entire growth that we have seen is essentially led by the HNIs and the retail investors who are necessarily coming into the market and buying and selling these ETFs. Uh, Finally, I think a little bit of our role in shaping up this particular market and growth of the overall passive market as a whole. I mean, we had the opportunity to work very closely with the industry at this pivotal time and play a very important role in maturing the overall market. We have also seen a consistent growth in AUM of funds tracking our indices. I mean, we started from a base of about 2 lakh crore in 2021, and that has now consistently grown to over 6 lakh crore as of January 2026. And if you look at from a percentage point of view, I think the yellow line that basically gives us the idea. I mean, we have today about 70% of the overall AUM tracking Nifty indices. Now, one thing to be bear in mind that we don't really play a role in the commodity side. So effectively, commodity. I mean, our role is restricted only to debt as well as equity side. On the debt side, 96% of the AUMs are tracking our indices. On the equity side, 66% of the overall AUM are tracking our indices. And again, there are some regulatory rules which says that EPFO money has to be split between indices like Sensex and Nifty. So even after accounting for all of that, we have been tracking about 66% of the overall AUM in the market. This is the number of products which are available in the market, which are tracking Nifty indices now. So we started with about 69. We had about 69 products available in the market in 2021. So that number of ETFs tracking Nifty indices have grown to about 223 this year in January 2026. And there are several new products in the pipeline which we will see getting launched in the next coming months as well. Similarly, if we look at from a number of product market share from a number of products point of view, we will have a similar kind of market share. So again, 96% of the products available in the debt side are tracking our indices, and overall about 70% of the products available are tracking our indices. So this is a bit of information about some of the leading AMCs in the passive side of the industry, particularly AMCs who are offering ETFs products. So Edelweiss, Nippon, Zerodha, SBI Funds, ICICI Pru, these are some of the large AMCs. They have got sizable assets under management on the debt-oriented ETF sides. On the equity side, SBI, Nippon Life India Asset Management, UTI Asset Management, ICICI Pru, Mirai Asset Management. So they have got, they are basically managing large portfolios of passive assets. And if you look at the commodity-oriented ETFs, Nippon, of course, is a leader. And then we have sizable amount of assets under ICICI Pru, HDFC, SBI, as well as Kotak. And if you look at some of the very successful, schemes within debt as well as equity, So on the debt side, there are various GSEC based strategies which are available in the market. So SBI, LIC, Nippon, and ICICI Pru, and again, they have got successful schemes which are tracking, good amount of AUM. Money market schemes, particularly the one which has launched by Nippon that track our 1 day Nifty liquid rate index. So that has about over 10,000 crore of AUM. And of course, the Bharat bonds, they have been a success story, big success story. And I think all the Bharat bond has a very sizable AUM, upward of 15,000 crore or close to about or 10,000 crore worth of AUM tracking these particular funds. A similar story on the equity side as well. So we have got broad market funds. These are largely tracking Nifty 50 ETFs and Sensex, SBI, UTI, Nippon, UTI. So they are the one who kind of dominate this particular space, largely because these are the asset management companies who have got mandate from EPFO. So a lot of these money flows into the assets directly from EPFO. There are a few asset management companies, they have global assets. Some of the global assets are also kind of done well. Then, very interestingly, there are these sectoral strategy and indices which are also available, and they are also garnering good amount of AUMs, like the Nippon India ETF, which tracks the Nifty banking indices, has about 7,000, close to about $8,000 in AUM. Again, CPSE ETF that tracks the Nifty CPSE index, that has got close to about 28,000 crore of AUM. And there is a lot of interest that we are seeing from the investor point of view, and therefore a consistent growth in AUM is also seen in these particular categories. I think that's kind of summarizes the overall presentations. Happy to take any questions if there are any now or maybe later. So back to you, Jalant.
Thank you, Mr. Chatterjee, for having a detailed walkthrough for our participants for the offerings offered through ETF and passive fund landscape, as well as the participative trends. The insights you have covered was truly helpful to all the participants, it seems, and definitely they'll be able to track in better way than compared to, I mean, what they must have been doing till now. There are a couple of questions as of now, which we'll be covering, and by that time, again, I request participants to post their questions under Q&A tab so that we can effectively cover. Please ensure that it is related to today's topic only to effectively address those queries. Very first thing, though it seems a bit basic, but I invite Anirudh and Harsh, both of you, in case you want to just cover them. So the question is a few key differences between mutual fund and ETF, if you can address.
Sure, I can take that on. I think the way that I would look at it is the ETFs are mutual funds. The only difference is that they are of stocks, which means that I can go and buy those funds in the exchange. I can buy and sell them. And otherwise, there is no difference. I mean, both are. I mean, it's a portfolio which tracks a particular index, and then of course this gets into a ETF wrapper, and that particular product is available like a stock in the exchange, which is very easy for investors to go and buy and sell.
Okay, thank you. One particular question is there any price band applicability for ETFs or not?
Okay, so I'll take that. So currently, equity and commodity-based ETFs has a price band of plus or minus 20%. And coming to the liquid based ETF fixed income, it is plus or minus 5% based on the ETFs.
Okay, so that is the price band applicability for ETFs participants. Next question is probably maybe Anirudh also can chip in. So you mentioned that in past few months there have been almost 63 new ETFs which have been introduced in the arena, out of which 51 was equity ETFs, right? So the participant wants to know, is there any specific theme surrounding which those new ETFs have been launched? Maybe a specific underlying or specific theme?
So most of the ETFs that we have seen is a broad market ETFs. I think one of the trends that we are seeing right now, the AMCs who never actually had a portfolio of passive funds, so they have now started filling in the gaps. So if you are an AMC, you had a index fund for Nifty 50, but there were no ETF for Nifty 50. You are now launching an ETF for Nifty 50. And of course now a lot of people from a contra investment opportunity point of view, thinks that this is the time for investors to look at next Nifty 50 as an investment theme. So therefore, we have seen a lot of a lot of AMCs have gone and filed with Nifty Next 50 as an asset, as a theme. Apart from that, as I was mentioning, because the feedback that we are also getting from our asset management companies and our partners are there is a substantial amount of investment interest towards sectoral indices and thematic indices, and that has led to creation and launch of several sectoral themes and thematic indices, because I think a number of them would be also into this particular category of sectoral indices based ETF and sectoral and thematic indices based ETFs.
Great. That brings to the next question where the participant is asking, you definitely mentioned about the performance of ETFs who have been tracking or following Nifty 50, but they just want to know a couple of other important indices which are underlying for ETF and which are having some traction in terms of volume and participation as well. So if you can just mention a couple of few important underlying indices as well for equity
So
and
I think
debt both.
Yeah, so I'm just kind of recalling from my memory. I know that Nifty Bank indices is sizable. I mean, overall, over 30,000 crore worth of AUM tracking that particular index. CPSE, as we have seen, some of the schemes are quite large. So that's another index. And again, these are all on the equity side. On the debt side, Bharat Band indices are quite large. Collectively, that has over almost about 60,000 crore worth of investments. We also have, few other thematic index like defense is one of them, where we have seen a systematic growth in AUM. I think the collective AUM, if my memory is correct, is over 10,000 crore.
Okay, thank you. Next participant is just wants to understand. Probably you mentioned couple of ETFs like Bharat Bond, CPSC, etc. Right? Maybe defense oriented. So he just wants to understand if you can briefly explain what would be the theme for those kind of ETFs.
Yeah, so Bharat Band ETF is essentially more like a fixed maturity ETF where we kind of, it's like a fixed deposit kind of a product where, the investors come in with a fixed return expectations for a fixed period of time. CPSC again is an ETF. It's an ETF wrapper where the investment simply goes to some of the centrally, as you can central government owned or commercially owned entities by the central government. So one very important point I would like to mention, Jalan, to your viewers. Last year, I mean, we knew that with the investments going up in the passive world, the investors as well as the intermediaries would like to know more information about ETFs and passive fund as a whole. So we launched a dedicated website. The website is called indiapassivefunds.com, and all your viewers can actually go to indiapassivefunds.com and actually see all these informations live into the portal, and this is absolutely free. There's no subscription which is needed. It provides you all these informations that your viewers are asking for, every single passive funds which are available in the market, all the 622 schemes that I mentioned about. There's tools that we provide which will allow them to look at the portfolio sectorally at a security level. They can also compare the performance of a particular scheme with another scheme and also see how overall the sector as a whole is performing. So
Great, great. That's
indiafunds.com. indiapassivefunds.com. That's the website.
Great. Participants, please make a due note of this because definitely from all of you or from market participants, whosoever wants to regularly track the passive funds arena in India, the website introduced by NSE is indiapassivefunds.com, as rightly said by Anirudh. So please make a habit to just keep referring every now and then wherever you require information. Definitely, it's much helpful information provided over there. Next one is Anirudh, probably you want to take it. So related to commodity ETF, you mentioned and showed in the insights that there has been a significant jump in the volume, maybe because of silver and gold things that emerged up in past few months. But the participant wants to know, apart from gold and silver, are there any other commodity ETF offerings or not? Or is there any possibility to come in future that they can see?
I cannot comment on the future possibility, but as per so the only commodities which are now allowed for passive fund creations are gold and silver.
Okay. Now, related to commodity ETF only, the next question is, are commodity ETFs backed by physical commodities? Can any demand and supply shocks in physical market create any crisis for these kind of ETF funds?
Sorry, is that question for me?
It's open for both of you. The participant asked that, are commodity
Yeah.
ETFs backed by physical commodities? Can any demand and supply shocks in physical market create any crisis for these kind of offerings?
So I think the second part of the question is whether a demand supply shock can create any disruptions in the commodity space. Of course, it can. Is it backed by physical commodities? The answer is no. It is not backed by physical commodities. It's essentially pegged to the price of the particular commodity. But the price is a function of demand and supply. So if the demand and supply goes for a toss, of course, there's going to be a huge repercussion on the price. What we have seen in the last couple of earlier this month and last month as well. So yes, a demand supply shock can actually create havoc in terms of the price movement that can cause volatility, and therefore it will impact the trading pattern as well as the AUM of the fund as well, performance of the fund as well.
Okay, great. It seems that we don't have any more questions as of now. So participants will be just waiting for a minute or so in case you want to just ask question. And by the time I'd like to invite Harsh and Anirudh if you want to just make a concluding remarks for today's topic.
So thank you again, Jalan, for inviting this. I know ETF is a very relevant topic, and people have been asking a lot of questions. There are significant amount of interest, even from a trading members' point of view, to participate and understand that how they can be more active in this particular space. We are quite passionate about the overall industry and the growth of the industry. We have been, playing a very key role and pivotal role in terms of the overall development of the industry. We would be happy to learn even from your viewers that in what other manner that we can provide them more insights, more informations about this particular industry. One of the initiative that we have taken, apart from the launch of the website that I already mentioned, is we would be providing a monthly newsletter in the form of Nifty Passive Insights. So we are very hopeful that we should be able to go live from the month of March. So we would be requesting all your members to sign up for the newsletters and the publication that we do from our side. And hopefully that will also provide them updated information about what is happening in this particular space.
Sure, thanks. Harsh,
Mhm.
any
Yeah,
concluding remarks from your side?
thank you everyone for joining the session. So I want to conclude that over the last few years, ETF has been transitioned from being niche investment product to a mainstream investment vehicle. So you can see the data clearly reflects the structural adoption, growing liquidity, and expanding investor participation. So uh, ETF has been a mainstream product from last 2 years. So yeah, thank you for everyone for joining the session. Yes, thank you, Jwalan.
Great. Great. Thank you. Thank you, everyone. Participants, as you know by now, will keep doing more and more open house sessions. We already have 6 to 7 more sessions lined up in the month of Feb and March. So do keep joining in. Do keep gaining the information that we are here trying to share. We'll be open for feedback for more and more such sessions. Thank you and have a great day coming ahead. Again, thank you, Anirudh and Harsh, for sharing the knowledge. Thank you.
My pleasure. Thank
Thank
you.
you, sir. Yeah.